There in the permanent or universal life insurance or UL, we have protection, of course, death benefit to beneficiaries, and also savings. So there will be protection and also there will be savings. So compared to whole life insurance, okay, compared to whole life insurance, so basically it is like similar to whole life, ya. Sebab apa? Sebab dia provide coverage for lifetime. There is protection and also savings. So it's similar to whole life. But then for universal, there are some features that is different, or there are difference to the whole life insurance. The first one, you can adjust premium. Okay, kita boleh adjust premium. In whole life, in whole life, we cannot adjust premium. Premium is fixed. For this one, premium can be adjusted. The second one, we can change also death benefits or sum assured. Okay, for whole life, sum assured again is fixed. So this one is whole life. Right, last one, we can use cash value to pay premiums later or to withdraw or we can also withdraw cash values. Okay, so this one is the example here, to pay premiums later. So in whole life, we cannot withdraw the cash value, so can't withdraw. So that is the case of whole life, yeah. But then for universal life insurance, we can use cash value. We can withdraw the cash values. So basically, apart from offering protection, savings, we have also, or universal life insurance also have flexibility. Dia ada juga flexibility. So these are the kinds of flexibility available for the whole life premium. Either you want to upgrade the premium, you want to increase the premium or decrease the premium, same as the death benefit, and use the cash value available in the account, in the universal life account. Okay, so how it works? How does the universal life insurance work? Okay, the first one, for premium allocation. Right, premium allocation, there are three parts that you need to understand. The first one, from premium that is paid monthly, okay, premium yang paid monthly, there will be cost of insurance. So cost of insurance here is basically for protection. Okay, let's say we have 1,000 ringgit per month. So let's say that COI here is 10%. Not 10%, 70%. Sebab protection, more to protection. 70% for protection. So this premium that is paid monthly, RM 700 will go to protection. And the rest is for savings, cash value. And there will be also interest. Okay, interest or rate of return for investment. So basic formula, we have that cash value at time t. Okay, cash value at time t equals to cash value at time t minus 1. So let's say here t equals to, let's say, 2025, yeah, this year. So cash value at year 2025 equals to cash value at previous year 2024 plus premium that you paid this year. Okay, premium this year lah. Premium this year minus premium last year. Premium last year minus VCOI, cost of insurance, right? So the whole thing here will be like multiplied through the interest or rate of return here, 1 plus I. So this one, since I give the example in terms of annual cash value, so the cash value here is last year's cash value. So this premium here is annually lah, annual premium minus cost of insurance times with 1 plus I, which is how much that investment give during year 2024, right? So we can have cash value at the year 2025. So this one cash value at the end of year. So at the end of year, approximately equals to like new year. Okay, new year for 2025. We know that at the end of year means that here at the end of 2024. Sepatutnya at the end of 2024 ni. But then equivalent lah, sama dengan new year for 2025. Means that January 2025. So P is premium, COI is cost of insurance, and I is interest rate or annual return. So that is how it works, right? Okay, macam ni just dia punya formula. Cash value yang tahun lepas tambah dengan premium, tolak dengan COI, darab dengan return. Again, you do not need to understand or to, sorry, you need to just understand, but no need to memorize this, because I will give the formula in the examination. Okay, key features. There will be flexible premiums and coverage. Cash values grows based on interest rate. Transparent policy structure. Loans or withdrawal allowed. Okay. Last week, one of your friends asked on the loans and withdrawal. So I think the product here, the product that you have asked last week or last lecture, is referring to universal life, yeah, because there will be loan and withdrawals. Compared to whole life there will be no such thing. Withdrawal ni, tak akan ada withdrawal. No withdrawal at all. Okay, transparency, policy structure. Okay, this one compared to whole life, the return, right? The return, this one, I think the return like is governed by the insurance company, so it is fixed return, yeah. So doesn't matter what the returns give during that year. Let's say, yeah, the actual return is 7% during the year 2024, yeah. But then, since the insurance company promised that the rate of return is 5%, then you will get 5% instead of like you will be having 7% return. Sebab apa? Sebab this one is already a promise by the insurance company, 5% ni. So this one kita boleh kata dia tak transparent lah. It's not transparent enough. Not transparent. And this is the case for whole life. But then for universal, yes, it is transparent. Instead of just get 5%, the return for 2024 is 7%, then you will get 7% return. So that is the transparency in the universal life. Okay, time value of money. So this one is important to learn. Time value of money concept. Cash value increases each year with interest, demonstrating compounding growth. So how do we examine or how do we calculate time value of money? Okay, later I will show you. Okay, comparison between whole life and universal life. So premium here for whole life, of course it is fixed. Again, as I said many times, whole life insurance hayat ataupun hibah, dia punya premium ataupun contribution setiap bulan dia akan fix. tak akan naik dah. Sebab tu perlu join the insurance awal, life insurance awal, so that you will pay less than you will pay in the future. Okay, universal life, it is flexible. Either you want to pay higher or pay lower, it's up to you. Cash value, it is guaranteed. Again, dia adalah guaranteed. Sebab apa? Sebab interest rate here is guaranteed or is fixed. So for example here 3%, so it's fixed. So cash value dia akan guaranteed. But then for universal, cash value is variable. So it depends on the market performance. So that in case that market performance is doing good, then you will get higher. But then in case that market performance is doing poor, you will get lower. So it is like a variable compared to guaranteed. It varies compared to guaranteed. Okay, interest rate again, for whole life it is fixed, and universal it changes with market condition or market performance. Control for the whole life, you are limited. There is limited control by the policy holder. The reason is that the policy holder just need to pay premiums, and premium also fixed, and cash value also guaranteed. So there is no you have power to control what you want in your policy. Okay, next one. Universal life, there is high flexibility, so you can adjust your premium, adjust the cash value, and you can know exactly what interest rate offer during the year. And transparency, there is low transparency in whole life, and universal life, there is high transparency. Okay, the simple analogy. Simple analogy is that when you go to a cafe, for example, whole life is just like a set menu, right? Set menu. It's not like menu, but then set menu. So in set, for example, we have already predetermined drinks dah ditetapkan, and main course dah ada. Main course, let's say nasi goreng. So there is nasi goreng and drinks. So there is already predetermined, dah disetkan oleh kakak cafe tersebut. Okay, but then for universal life, it is like buffet style. So in case that you want like customize what you want to eat, instead of just eat nasi goreng, so you can eat like other main course lah, right? Also same as drinks, you can choose any drinks that you want to drink. So that is that's the comparison between whole life and universal life. Right, okay, next one. So we have some simple examples here. Let's say using the formula that we have been through just now. Example, we have basic gross. City pays 3,000 ringgit. Cost of investment or cost of the insurance. Cost of insurance is 1,000 ringgit. Interest rate is 4%. So CVT equals to CVT minus 1 plus P minus COI times with 1 plus I. 1 plus I. So CVT, we know that CVT, we want to find CVT. In this case, we want to find the CVT, which is the current year cash value. Current year cash value, yeah. So current year cash value, how do we find this? Is through adding up CVT minus 1 plus P minus COI. So CVT minus 1, we do not have this. Kita tak ada this value. The reason is that it is just the first year that CT sign up for the universal life. Okay, they sign up, for example, during the year 2024. So there is no such thing as the previous year cash value. No, so zero. So there will be 0 plus 3,000 the premium minus with cost of insurance 1,000 times with the interest rate. So the cash value at the end of the year End of year cash value is 2080, right? RM 2080, or end of year or beginning of new year. So ini adalah cash value dia. As simple as that. Okay, using cash value to pay premium. For example, we have 10,000 cash value, so COI is 1,200. So new CV is that just 10,000 minus with 1,200. So we got 8,800, right? Okay, so this is the features here, the cash value that we have accumulated. Cash value yang dah accumulated ni boleh withdraw and pay for the COI or cost of insurance. Pay for this. Okay, next one. We have increasing death benefit. For example, very simple example here. Farah increases coverage from 100k to 200k by paying more. Or withdraw money. Ali withdraws 5,000 ringgit from 20,000 cash value. So at the end of the day or at the end of that time, there is only 15,000 left. Okay, yang ini saja yang tinggal. Sebab apa dia boleh withdraw the money, the cash value that have been built in the UL policy. So the last one, IMAN interest rate drop from 5% to 3%, indicating that slower growth or poor market performance. So at the end of the day, there will be less cash value accumulated. Okay, one of the most important thing to learn here is that we need to learn about time value of money, TVM, yeah. So UL cash value grows over time with compound interest. Simple formula is that we have this, yeah, simple formula. But then in general of finance form or general finance form is that future value, FV here is future value equals to present value times with the rate that we rate of investment, right? Okay, to the power of n means that n here means that how many years that we are expect to calculate the future value. For example, in case that n equals to 1, so it means that we just want to have next year's future value. Okay, means that next year future value. How about n equals to 2? Next 2 years. Next 2 years future value. Okay. Alright, so that is future value. So how do we determine present value? Value hari ini atau value tahun ini. So we just like balance the equation here or move this 1 plus I here divided by FV. Okay, PV here. We have PV here. So PV will be the subject. So PV, this one will be moved here. Since this is multiplication, so we move here, there will be division. So 1 plus I to the power of n. So we can get PV formula. So that is PV. Alright. Okay, mathematical example 1, we have premium is 2,000 ringgit. Cost of insurance is 600. Interest is 5%. So CV is that we can have CV 0 plus 2,000 minus 600 times 1.05. We can have 1470. Okay, 1470. Okay, so that is 1 year growth. How about 2 years growth? You can do also. Okay, please don't get confused here. You boleh buat contohnya CVT equals to CVT minus 1 plus P minus COI 1 plus I. Okay. Tak apalah. It's okay. You just apa ni, kalau tak dia akan jadi summation, nanti you tak faham pula. Okay, it's okay. You just use the formula lah. Contohnya dalam exam nanti, of course lah, saya tak bagi sampai 10 tahun 10 kali ya, you nak kena kira benda ni. So yeah, it's okay. Just use this formula. Okay, maybe you can use it. Okay, contohnya untuk 2 tahun CV dia adalah CV2 is last year's punya cash value plus premium minus with COI times with the interest rate. So we can get the net after 2 years cash value is 13.50. Okay, present value, and this one is present value ya. This one kita nak kira present value. Please don't get confused. This one is present value. Maksudnya akan datang berapa duit yang kita ada. Means that RM1,000 today, RM 10K today tak sama dengan RM 10K in the future. Right? So this is present value and the future value. But the one that we have calculated just now is cash value for, this one is for universal life insurance, UL. Okay, UL. This one is for UL. You jangan confuse. This one ini untuk UL. But then CVT ni untuk UL, cash value untuk universal life insurance. But then this one is like general formula to find present value or future value. Right? Contohnya saya nak cari berapa nilai, or how much is the value of 10K today compared to compared to next year. So RM 10K today, I have RM 10K today times with the rate of investment that I can get this year. For example, 3%, 0.03. So we can have like RM 10, 300, right, in the future. So next year, my 10,000K equivalent to this in the future after 1 year. So this is like a general formula ya. Ini adalah general formula saja. So this has nothing to do with the universal life. Okay, I think we have been through this one, like this one present value, future value ni. So tak apa. Okay, contohnya, okay, Ali has RM5,000 cash value. Dalam cash value ni is cash value kat mana? This one is in the UL lah, in the universal life. Okay, dalam universal life dia ada 5,000 cash value. So COI is cost of insurance adalah 800 setiap tahun and interest is 4%. Okay, so you can start like, kalau nak buat untuk multiple years, okay, nak buat untuk multiple years, so better to do in a table like this. Buat dalam table macam ni. So start with year 1. Start of CV is RM5,000, RM5,000, right? So interest is 4%. So how much 4% from 5,000? We have RM 200. Okay, so we can have minus with the COI. Kita perlu minus dengan COI. Then we can have end of CV is 4,400. Okay, this one plus this one minus this one, 4,400. Okay, start at year 2. Okay, beginning of year 2. So we put it this as the new CV, our new CV. We put it here, new CV, 4,400. So based on this new CV, how much interest that costs or how much the return that we'll be getting during year 2 is 4% from there, 4,400 here. So we get 176. Okay, 176. So this one, start of CV plus interest minus with COI. So this one is maintained or fixed. We can have end of CV is 3,776. Okay, again, repeat the process. This one will become new CV, new cash value at the beginning of year 3. So interest rate 4% brings 151 minus COI, then we can have, and CV is 3127. So this one, cash value ni lasts over 3 years. Okay, this one can last over like, cash value can last over 3 years without new premium. Okay, cash value here, provided that no new premium. Okay, no new premium paid. So it can last over like more than 3 years. More than 3 years dia boleh survive. The reason is that, of course lah, these 3 years, since the cost of COI is only 800, so maybe like you need 7 to 8 years before this CV here, cash value here depleted. Maybe lah, maybe ya. Kalau ikutkan dekat sini, maybe like dengan interest rate, yeah, 7 to 8 years before, it will no longer can pay for the COI. So this is the case when there is no new premium. Okay, kalau ada premium baru macam mana? Kalau ada premium baru, guna je lah formula tadi, right? CVT equals to CVT minus 1 plus P minus VCOI times 1 plus I. So in this case, premium here is 0. So there is no premium in this table, tak ada premium. So in case that I want you to calculate with premium, so you just add another column lah. Add another column, so premium here for example. So that's how, yeah. Okay, next one. Example 5, comparing interest rate. Farah pays 2,000 ringgit yearly, COI is 1,000 ringgit. So in the case that 3% interest rate, so Farah will get 1,030 ringgit at the end of year 1 and so on. So this one is just like comparison to show that in case that the higher interest rate, so there will be higher return for the or higher cash value. Right. Okay. So basically, right, back to the basic that we have learned on the universal life insurance. So this one again, as you see just now, there will be cash value growth. Interest rate is you can control the when you want to withdraw. Transparency and premium is flexible. Okay. Right, guys. Any question before we proceed with some exercises? Any question? Tak ada orang hari ni tak ramai. I think bolehlah kita nak panggil. I want to know you better. Siapa yang saya tak kenal kat sini Kurno Hidayah saya kenal, Azizi saya kenal, Yun Jai saya kenal, Chong Shini dan Tan Sihan saya kenal, Akira Lee Min Ho saya kenal, Syafiqah saya kenal, Umairah Nabil saya kenal, Yuhinan. Yuhinan ni macam tak familiar nama ni. Yohinan, are you here Yohinan? Where are you Yohinan? Oh, you are Yohinan. Okay. Jolin Tan Kuan Chu. Kenapa ya ada nama kat depan ni, like I noticed that there is nama Chinese saja, tapi there is like nama yang kat depan ni. Kenapa ya? Contohnya ada nama Jolin Tan Kuan Ju. Kenapa Jolin tu? Jolin tu refers to, is it reference to your religion or no? But then you can just add lah. Boleh add saja. Christian name. So you are Christian lah. You not Christian. You bukan Christian, tapi ada nama Christian tu lah. So it doesn't mean that ada yang nama contohnya Edward Lee something. So it doesn't mean that he is Christian. Oh, okay. Before dia I thought that okay, kalau ada nama English kat depan tu must be Christian. No lah. Okay. Alright, lagi Tiu Shooter What are you? Tiu Shooter, where are you? Okay, Tiu Shooter. Okay, Tiu Shooter, come forward, Tiu Shooter. Please come forward. I want to ask you, what are the differences between term, endowment, whole life, and the most recent one that we have learned today is universal. Apa beza keempat-empat life insurance tu? What are the differences between all those? Berbeza keempat-empat life insurance. You okay? Right, go.
Term life only protection. Work life have protection and saving, the fixed one. And endowment has short-term saving and protection. And university life have fixed premium and interest investment.
How about coverage? term recovery sampai dia for the whole life until recovery ends. Okay, term life recovery ends. How about whole life? Die. About endowment? So the coverage, how long the coverage can last? Endowment. Endowment until. So that is benefit. Benefit you pay, die, or survive. Okay, how about universal? When does the coverage end? Zero. Please provide me the differences between term, universal, whole life, and endowment. Guys, you tak faham ke yang saya ajar ni? Macam mana ya? Okay, for the term, okay, provide coverage for, okay, fixed period, okay, whole life, provide protection for lifetime. Okay. That is for whole life. Whole life betul? Term life. Term life. Right, okay. Okay. Repeat for the whole life. Okay, good. How about endowment? Okay. Okay. So what happens if the policyholder survives? There will be benefits in terms of maturity values and bonus. Okay, how about universal life? Okay. permanent lifetime. So lifetime ya, permanent tu macam lifetime lah. So lifetime for coverage for the insured. So what are the differences between whole life and universal life? Okay, good. Mm-hmm. Okay. Alright. Okay, good. Right. Guys, you nak presentation ke? I notice that susah betul nak bercakap ni. And bila bercakap pula selalu tak ada confidence. You nak kan? Siapa ni? Okay. Lee Min Ho, you nak kan? Lee Min Ho. Huh? Hui, I know, just kidding. Just kidding. Okay, right. So we have practice exercises. So please answer these practice exercises. Senang saja ni. So dalam exam, so lebih kurang macam ni juga dalam exam. Cuma I will give you like scenarios lah. Right, so this is 2000 level. Again, saya tak akan pusing-pusing dia punya soalan tu. Just you need to understand the context. So you can just apply the formula and then that's it. Okay, I will give the formula in the examination, but then I will not specify this is for like this is for universal, okay, this is for whole life, this is for term. So I just put the formulas in one sheet and I will not specify which formulas belongs to which policies. So you need to identify by yourself. Okay? Saya akan letak sahaja formula tu banyak-banyak, then you need to specify by yourself. So tak ada spesifik lah, saya akan letak, let's say this one for universal, this one for whole life. Ada satu lagu